In San Francisco, and this is Bloomberg Technology. Coming up this hour, a deadly combination of cold and snow plunges millions across Texas into darkness as rolling blackouts surge to contain an energy crisis. We're going to have all the details, plus what can be done to avoid future emergencies with the CEO of a Texas-based renewable energy company. Plus, Bitcoin blows through another milestone, surging past $50,000 for the first time as more major companies jump into crypto. We will have an outlook. And it's the week we've been waiting for ever since GameStop became a market darling, creating mayhem as retail investors sought to edge out short sellers. A House hearing is set this week, and all the major players from Robinhood to Reddit will testify. We'll have a preview from an SEC veteran. All those stories in a moment, but first let's get to U.S. markets, where the energy sector seemed to seize up today on the story that continues to unfold out of Texas. Our Ed Ludlow has the fuller picture. Ed, walk us through the day.
Yeah, energy dominates. You know, the S&P 500, the main gauge of U.S. equities, not really pulling in either direction. Investors undecided broadly as they kind of continue to assess the vaccine rollout, the potential for a big stimulus package. But all of that's on hold right now because of what we see playing out in Texas and other states, where this massive freeze has led millions without power. You can see there the S&P 500 energy index, that group of energy stocks, outperforming in a big way, up by 2.25%. Some underperformance in technology, though. NASDAQ 100 off by around 0.25%. That said, the NYSE FANG Plus index, that big basket of mega cap tech stocks, up by 1%. But as you say, it's so closely linked to energy and so closely linked to the commodities markets. If you look at the specific stocks that are on the move today, you can see oil companies higher, something that our colleagues were talking about in that special edition of Commodities Edge just now. Occidental, the second biggest player in the Permian Basin, up by 4%. It's telling customers that it's not going to be able to honor its contracts to deliver oil because of the situation out there. Marathon Oil also higher, but a different story in the utilities. NRG Energy, the company that actually owns and operates the power generation sites that power your homes, off by almost 6% because there's two competing stories there. And then if we dig into the commodities picture, you can see that those oil stocks are rising as oil also rises. You can see West Texas Intermediate and Brent crude, the global benchmark, both higher significantly. And that big pop in natural gas contracts having some crazy outperformance on the day as different traders and consumers struggle to power their homes. You know, the images coming out of Texas and other states, quite incredible with those plummeting temperatures. Emily.
All right, Ed, a lot to digest there. I do want to hit Bitcoin quickly. Another milestone there. We're seeing more companies under pressure to give their answer to Tesla's big investment. What was the movement that we saw there?
Yeah, was it last year? Was it last week that we were talking about 35,000, 40,000 for Bitcoin? We're already at 50,000. You wake up and the picture has changed so much. Some big news over the weekend that Morgan Stanley, according to sources, is considering adding the cryptocurrency to some of its main funds. A big vote of confidence from a big institutional player. And it's all apart from that momentum coming off that Tesla news a week or so ago, news that Tesla would invest $1.5 billion into Bitcoin through its treasury and consider even taking payments through the cryptocurrency in a limited way. You see other big name investors, other companies like MasterCard talking about the potential for Bitcoin in terms of transactions. And this is a record-breaking rally that seems to have no end in sight. Emily.
All right, Ed, thanks so much. We're actually going to be speaking with the CEO of MasterCard on the show tomorrow. We'll definitely get to their thoughts on crypto. Meantime, I want to turn back to the story continuing to develop out of Texas. Ice, snow, Arctic temperatures have plunged the state into a crisis that's left nearly 5 million people without power. Oil refineries and shale wells shut down amidst unprecedented freezing weather. The deep freeze forecast to continue until at least Wednesday. The Associated Press has reported at least 2 deaths, likely from the cold. Dan Brouillette, who served as Energy Secretary under President Trump, has blamed the intermittent, less reliable renewable power for the crisis. Take a listen.
Until we can reach the point that we have grid scale storage and battery technologies that allows us to rely on this energy 24/7, it's important that we not put ourselves in a situation where we're dependent upon it.
Joining us, somebody who knows a little bit more about that, John Berger, CEO of Sonova, a Houston-based provider of residential solar and battery storage. Okay, before we get into the fossil fuels versus renewables debate, John, I just want to say we can see you and hear you clearly, so thank you so much for joining us. I know you're coming to us from Houston. How has your company been impacted by the blackouts happening across the state?
Thank you, Emily. Thank you for having me. We've had a tremendous amount of impact. Myself, my home does not have grid power and has not for a long time. Many of my employees have not had power in their homes for a number of days, now stretching into yet another night. So there's been quite a lot of pain, quite a lot of angst, a lot of questions about what happened, what's going on, when this is going to end. We are trying to do everything we can as a company. The good news is our customers that do have the storage are doing quite well from what we can tell and up to this moment in time. And we certainly see a path forward here of making people more independent and putting their future in their own hands rather than depending on systems that can be obviously very unreliable and not meet the needs of our modern age.
Look, we know the transition to renewables is going to take an incredibly long time. The infrastructure needs to get there. Is there anything that a company like Sonova can do in a moment like this to alleviate the immediate crisis?
Well, we can continue to, and we have, go out there, make the case, and more and more people are coming to us for solutions. And I want to make the point right now is that this is not a renewable versus fossil fuels problem. It is not. That's a fact. Everything failed, particularly the rotating machinery. It is wind turbines. It is also coal plants. It is also natural gas plants. In fact, more natural gas plants failed than anything else because Texas has more natural gas plants than anything else. Nuke plants failed as well. So this really is not about renewable versus fossil fuels. What it is about is that we have a centralized system where you have a single wire going to a single home, and physics say that that can fail, and it fails often. This is a problem that we've seen brewing for my entire 25 years in the power business. We've actually seen these issues. I've dealt with them almost a little over 20 years ago in the eastern side of the United States. So this is not unprecedented either. And what we're seeing here is that we want, as society, as we move forward in time, whether it's wildfires in California, whether it's hurricanes in Florida, whether it's winter storms here in Texas, the level of reliability, particularly as we move to a society of maybe working more from home, doing more things at home, the level of reliability for our power system, regardless if it's fueled by natural gas, coal, or wind or solar, even with some storage, is not enough. And you need to put the generation and the reliability at your home. And that's what Sonova does. And I would hope that we can see that this will be more of a part of the solution. And indeed, I'm very confident it will be as we move forward in time.
Now, we're getting some headlines. U.S. oil production has plunged by a third as this continues. Still unclear when power will fully be restored in Texas as this continues. Now, what do you make about the argument that, renewables just aren't there yet? That, folks like myself who live in California, I also had to deal with rolling blackouts due to the wildfires through all of last year. People blamed California for, powering too far ahead when it came to renewable energy and neglecting some of these more tried and true sources of power, like natural gas.
Well, as I said, it really isn't about renewable energy versus fossil fuel energy. It's really more about what level of reliability do you want as an individual, as a company, as a community, and then how do you go about getting that reliability where you want it at the best price, and yes, with cleaner power. And so this is something that we've seen. It was sparked by the pandemic in terms of more and more folks want to be able to go to their home and have reliability of power. Think about it. If you're going to work from home and be on the Zoom call or the Teams call or whatever, you need power, right? And so if you look at backup power generators, which use natural gas and diesel, they're in extreme demand right now. Obviously, this event's going to cause them to become more in extreme demand. And then when you look at solar and storage, which we do, plus with gensets, those technologies are in extreme demand and have been since the July timeframe as well. This event will also cause solar and storage to be in high demand. So all this is more about a level of reliability. The generation technologies with wind and solar have never been better. They are economic, they are good, and coupled with storage, they do work. And again, I point to the fact that the fossil fuel side of things has failed here too, considerably. And so let's stop picking scapegoats and let's figure out how to really solve this problem. I know political sound bites of I hate renewable or I hate fossil fuel, maybe it sells well, but at the end of the day, it's not factual, it's not true, it's not what happened, it's not what's going on down here.
Right, and at the end of the day, it's about just keeping people warm tonight. I mean, there's concerns about people freezing to death, let alone being able to take a work call. Sonova CEO John Berger, thank you so much for joining us, and stay safe where you are in Houston. Okay, coming up, the flurry of trading activity around GameStop has led the House to hold a hearing this Thursday with a focus on short selling and stock manipulation. We're going to have all the details for you on what to expect coming up. This is Bloomberg. It was only a few weeks ago when we saw the GameStop frenzy hit its peak. Now, as stock prices return to normal, the House Financial Services Committee will hold a virtual hearing Thursday about wild market swings with more insight on commodity and security regulation. I'm joined now by Barnes & Thornburg partner and former SEC and FCTC lawyer, David Solvik. David, thank you so much for joining us. So what kind of fireworks are we going to see on Thursday? How sort of riveting do you expect this testimony to be?
Hi, Emily. Thank you for having me. You know, I don't know. I think there will be fireworks, but I don't know that when the fireworks have cleared that we're going to find that anybody has really done anything wrong. Certainly, Congress wants to find a villain in this, and it seems that they want to work the narrative that the big bad hedge funds is abusing the individual investor. But I'm not sure that that's how things are going to shake out in the end.
So, if you see blame, where do you think it lies?
Well, I'm not sure there is any blame at the end of the day. I mean, in securities markets, every day of the week, there is a winner and there's a loser in most transactions. So just because some individual investors may have had their trading halted and may have lost some money doesn't necessarily mean that there is any blame to go around. I think that if there is a thorough SEC investigation, which is going on right now, I'm certain we may find out that some of the blame lies with these individual traders who apparently work together to drive up the price of certain stocks, including GameStop.
And how would something like that be legislated or litigated or punished, if you will?
Sure. I don't know that there would necessarily need to be a new legislative fix or a change to existing rules because the Securities and Exchange Commission already has the authority it needs to punish that kind of misconduct. So, for example, the securities laws already prevent market manipulation, and they already prevent and prohibit traders from injecting false information into the public sphere for the purpose of affecting the price of a security. So those laws and those rules are already in place. It's just a matter of the SEC running out its investigation and seeing if anybody needs to be charged.
What about the focus on Robinhood and payment for order flow, which, you know, many people seem to agree is a conflict of interest? As I understand it, it's banned in several other countries, but not the United States. Is that a problem?
It's only a problem if firms are not disclosing it to the customers who are trading through their platform. And just recently, in December of last year, the SEC charged Robinhood with failing to disclose the extent to which it received payments for its order flow. But, so long as that is disclosed and so long as the people who are using the Robinhood platform to do their trading are aware that Robinhood is receiving money for it, there is no real conflict and there's no violation.
Now, the Robinhood CEO himself, Vlad Tenev, is pushing for a reform of, so-called T2 settlements, the ability to sell more shares, short sell more shares than are out there. Is that something that you see as problematic?
Again, short selling is not necessarily problematic. It is a means for participants in the financial markets to hedge other risks that they may have. So I don't think the problem necessarily lies with anybody who is short selling any stock, including the hedge funds who have been vilified recently. Again, it's a matter of disclosure. It's important that people who are taking large short positions are disclosing those positions, and so other market participants have transparency into what's going on. But I don't see any underlying problem with the fact of the short sales themselves.
And what about, lastly, companies like Reddit or Discord or perhaps even now Clubhouse, where you have folks getting into the same room or virtual room and saying, we're going to do this and we're going to do this together. Do the platforms bear any responsibility there?
That's a good question, and I think that's the big wild card because colluding among traders for the purpose of moving a stock either up or down in a way that is divorced from the three forces of supply and demand can be market manipulation. And other participants, including institutions who are not themselves doing any trading, can be charged under the securities laws for aiding and abetting violations. So I'd say it's a possibility. And again, that's going to depend on what the SEC finds out when it's through with its investigation. But I wouldn't foreclose that possibility, certainly.
All right, interesting. We'll be looking for the fireworks and or hot air on Thursday. Thank you so much for giving us a preview on what you see ahead. David Slovic there, former SEC lawyer. All right, coming up, Bitcoin jumping to $50,000. The record-breaking rally continuing as crypto surges past a new milestone. How sustainable is it, though, for the asset people love to hate? That is next. This is Bloomberg. Another milestone for Bitcoin, which has been on a rocket-like surge over the last couple of months. The world's largest cryptocurrency crossing the $50,000 mark just 6 weeks after breaking 40,000. The most recent catalyst, Tesla's announcement that it added $1.5 billion in Bitcoin to its balance sheet. That sent the price up 16% February 8th. And over the weekend, Bloomberg reported Morgan Stanley may add Bitcoin to its list of possible bets. To discuss, we are joined by Bloomberg's Olivia Raymond. Olivia, thank you so much for joining us. Talk to us about the recent surge here. The question everybody keeps asking is right, but is it going to last?
Hi, and thank you for having me. And yes, that's a great question. So the 50K milestone, I think, is something that industry participants have been watching very closely. And it has been considered as a significant milestone that industry participants were hoping to reach that would indicate a wider mainstream adoption like we saw with Elon Musk and Tesla and Morgan Stanley, like you just said. But they aren't the only ones. MicroStrategy, for example, has been adding Bitcoin to their balance sheet since last year. And BNY Mellon recently made announcements that it's developing a team to help with digital assets. And MasterCard has said it's going to begin to allow cardholders to transact in certain cryptocurrencies on its network. So there are a lot of different institutional adopters that are all of a sudden sort of flooding into the crypto space.
I'm actually going to be interviewing the CEO of MasterCard tomorrow, Michael Miebach, about their crypto plans. But look, it's one thing to invest in Bitcoin, as Tesla and Elon Musk did. It's another to say, well, maybe we'll accept Bitcoin or cryptocurrency at a later date. It's something we are strongly looking at. Like, how many of these companies do you think are actually going to make a commitment the size of Tesla's?
It's actually so great that you just asked that question, because we just had a study come out from Gartner that said that actually a majority of chief financial officers that were surveyed, it was a survey of 77 executives, and only 5% said that they were considering making a corporate asset investment in Bitcoin this year. And a large majority said that as of right now, they're not considering to do that. So this is not necessarily something, again, this is based on just one survey. If you speak to Michael Saylor from if you speak with Michael Saylor from MicroStrategy, he says that there are a lot more demand. So I think it's really a narrative that we're going to have to wait and watch and see. Some people are saying that it's a little bit too soon for more companies to jump in and do this, while others, and they usually are the people who are more of these Bitcoin evangelists, as you could say, who really, believe that Bitcoin is the way of the future, who are saying that there is going to be a surge in demand. So right now, I think it's more of a wait and see to what kind of companies actually make the commitment.
And last quick question. We've got about 30 seconds left, Olivia. Michael Novogratz saying it's going to hit 100,000. It seems like we're hearing from a lot of these supporters and less from the doubters. I mean, are there folks out there? Who are the folks out there saying this is speculation?
That's a great question, and you're right to say that there has been more people than not that are saying that, this is here to stay, and that's because of the institutional adoption. It's because names like Tesla and One River Asset and BlackRock are starting to dip their toes in this. And it's different from the 2017 rally because that was mostly driven by retail investors, where now finally Bitcoin is entering the mainstream a bit more, and that's why we're getting this slew of corporate endorsements, essentially.
Okay. All right. Well, we'll continue to follow your reporting. Bloomberg's Olivia Raymond, thank you so much for stopping by. Coming up, what could life be like without Google? Well, some in Australia may soon find out. We'll take you there next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Details on 13F filings from big investors are tumbling out this evening, and one of the most notable comes from Warren Buffett's Berkshire Hathaway. We're seeing that in the last few months of 2020, Berkshire cut its holdings of Apple, even though it was still valued at $120 billion at the end of last year. Berkshire also added stakes in Verizon and Chevron. All right. Turning to another story, what would life be like without Google? That is what some Australians are asking as the country proposes a new law that would require Google and Facebook to pay news publishers for content they link to. Google has threatened to pull out of the country altogether if the law is passed. Facebook has threatened to limit its news sharing feature. Joining me now from Melbourne, Dr. Belinda Barnett, Senior Lecturer in Media and Communications at Swinburne University of Technology. Dr. Barnett, thank you so much for joining us. Where are we at with talks? It sounds like the Australian government is a little bit closer to a possible agreement with Google and Facebook at this point.
Right. So the government are debating it in Parliament this week. And what we've heard this morning is that Google has come up with a deal with Nine, who own a number of different media outlets in Australia. So Google now has deals outside of the deal with Nine and with Seven West. So those are two of the major publishers in Australia. They're still to make a deal with News Limited. But this will make the government feel safer or more secure in making some concessions in the code in this coming week.
So is Google pulling out of Australia still an actual threat?
They have backed down on that threat. I think when they realised that the government were going to make some amendments to the legislation. So coming into this week where it's being debated in Parliament, it looks far less likely that Google will pull its search engine out of Australia, and also far more likely that they'll get what they want.
So, there are some interesting implications here in terms of what or how this new law or code could impact negotiations with these companies worldwide. I mean, do you see this as something that could take off in other countries?
Certainly, lots of countries have tried to make Google and Facebook pay a fair price for news content. In France, France has managed to secure deals for some of its major publishers, but Google is doing this through its product called News Showcase. So this is a separate product from Google Search. So what they have essentially done in France and what they're trying to do in Australia is to offer a separate product to organic search results and say, look, we'll pay for it within this product on our terms and at a price that we consider fair. And so it insulates Google Search, their main offering, in a way.
So we've been following the reporting that Seven West Media, which is one of the biggest media businesses in Australia, did strike a deal with Google, reportedly in the area of $23 million US. Do you think that we're going to see more of these deals being struck? Do you think that some of the littler media outlets are going to be able to strike these deals with a giant as big as Google?
So far, Google have signed up a number of smaller media outlets in Australia to their News Showcase product. The Conversation, Crikey, a number of smaller publishers. And I guess the biggest news in the last few days is that they've got these larger, more powerful publishers like Nine and like Seven West to sign up to their offering.
So, and as I understand it, it's not just news, but also videos from all sorts of contributors that are shared across YouTube that could be impacted. Do you think that we could see sort of the definition of who this applies to widen, and what would the implications of that be?
Well, the government has been very clear, and originally the ACCC, who made the recommendations, were very clear that this would only apply to Google and Facebook for now. There is the potential going forward to sign up other monopoly or large platforms, but I don't think we're going to see a generalised widening of the code. It's really been written for monopoly, for larger companies.
All right, interesting. It's been fascinating to watch this tug of war from this side of the Pacific Ocean. Belinda Barnett, Senior Lecturer in Media and Communications at Swinburne University of Technology. Appreciate your perspective today. Meantime, conservative social media site Parler has returned to the internet for now. Amazon's cloud unit pulled Parler's web service after some of its users planned and supported the attack on the U.S. Capitol on the site itself. The cloud hosting company, we're joined now by Bloomberg Tech's Will Turton. Will, give us the state of play. Where is Parler today, and can new people join, essentially?
Hi, Emily. Thanks for having me. So Parler is back. That's kind of the big headline here. But, it's back intermittently. But the fact that it has returned, the fact that it was able to get back on the internet after being pulled by Amazon Web Services is kind of an incredible feat. It's hard, as we've learned in the past few years, for, when sites get blocked out of big tech providers like AWS to get back online. So the fact that they're back now, although the service is intermittent and some people are struggling to get on and it's crashing a little bit here and there, the fact that it's back shows that Parler, will probably be around for a while and will probably be an influential force within social media and in conservative politics.
So is this something that you believe will be a long-term solution?
Well, that's one of the big questions, right? Can Parler get to a state where the site is actually as usable as, its competitors in Facebook and Twitter? They're appealing to people who feel like the platforms like Facebook, Twitter, and YouTube are censoring them. And they're essentially saying, hey, we're kind of this alternative where you can say whatever you want, just about, as long as it's not illegal. So, there are other websites that do that, although, the kind of audiences they attract are a little less palatable for your average person. So, that's kind of the big question with Parler.
So, we're talking about this cloud hosting company that is supporting them, Sky Silk. Do you see a company like this becoming like a kind of haven for some of these, more right-leaning sites that have been perhaps shunned by more traditional hosting providers?
Well, it's going to depend on the quality of their service. And, for the most part, a lot of sites are not kicked off the platform. I mean, most, AWS kicked off Parler, it said, because they had received multiple warnings from AWS about their content moderation system and which were ignored. So, it's kind of a twofold question. One, will this company, SkySilk, and others like it be actually able to provide a comparable service to keep these websites online? And two, will there be much of a need for it? Sites like Parler that actually get banned are more of an exception.
Now, talk to us about the status of getting back into the Google and Apple app stores. We've heard Tim Cook, for example, talk about the importance of Parler having very strong content moderation, or at least a plan. What's the latest on that?
Right. I haven't seen or heard anything from either of the companies about getting back on, but I know that there's people inside of Parler that think and hope that they can get back on these platforms. And it, if they're able to actually develop a kind of coherent content moderation strategy that they're able to enforce that aligns with Apple and Google's rules, then, in theory, they should be able to get their apps back on the store. I think, probably the first priority for them is making sure the service is actually functioning and works and is up. That's probably their first order of big business. But the fact that the site is at least somewhat online is of note.
Meantime, President Trump is still cut off from Twitter. I spoke to the CFO of Twitter last week, who said there is no path to return. He is permanently banned. Facebook, he has been suspended indefinitely. That decision going to an oversight board. But clearly, the former president still has a lot of power if you look at the results of the impeachment trial and the way that Republican lawmakers voted. Do you see President Trump joining Parler, or if not, a social network like it, if there is such a thing?
Yeah, it's a great question, and I think it's going to go back to, again, the reliability of the site, how functional it can actually be. But as we just are seeing play out right now, right, like Trump put out a statement through his super PAC, which is being widely covered. So, the president has, various means in order to get his message out. And, compared to what we're used to, I think the ex-president rather, has been holding things closer to the vest than before. So I think it's more of a question of what his messaging strategy will be in the future than whether he'll use Parler in particular.
All right, Bloomberg Tech's William Turton, thank you so much for that update. Of course, we're going to continue to follow. Coming up, in the crucible of the COVID-19 crisis, a leader in biotech says genomic surveillance is central to the solution. Illumina President and CEO Francis D'Souza joins us next for our Work Shifting series. This is Bloomberg. Turning now to today's work shifting segment on getting people back to the office, physically speaking, as the pandemic wears on. In a recent op-ed for The Economist, Francis D'Souza, president and CEO of genomic technology company Illumina, is calling for a global Bioforce to track the various mutations of COVID, as well as protect against future viruses. Such a force could protect workforces in years to come. Francis joins me now. So explain exactly how this would work in your vision, Francis.
Yeah, one of the things that really was an eye-opening moment for a lot of people, both in public health as well as in national defense, was just how unprepared we were for this pandemic. And as we think about both making our way out of this pandemic as well as preparing for the next one, it's becoming clear that we need a surveillance network that'll do a better job up front in terms of identifying when an outbreak was happening, and then identifying the pathogen associated with that outbreak, but then also tracking how the virus or the pathogen is spreading, how it's mutating, because all those pieces of information have important decisions and impacts on our decision around policy decisions, like when and where should we do travel restrictions, what tools should we be using, are our diagnostics starting to fail and need to change, do we need different vaccines? There was we were called in as Illumina into Wuhan in December 2019 to work with the public health team there to identify, the source of that pneumonia of unknown origin. And we were part of the team that published the first viral sequence in January of 2019. But what was surprising was a few weeks later, when in the US, it was uncovered that we had that virus circulating in the US for weeks and months, and we didn't even know. And so, that has huge implications, and we need to do better next time, whether it's for another coronavirus or emerging antimicrobial resistance or even a bioterrorist attack.
So I'm curious about how much of life truly changes for good after this. After we're vaccinated, we're in a new normal. Are we, do we still have that fear about going into public spaces? Are we wearing masks forever on, public transportation, for example? What do you see ahead?
I think a lot of life goes back to normal, but I think some things are changed permanently. I think, the recognition that there could be outbreaks like this and they could have such significant consequences, I think going to change the way we do a lot of things. I talked about the fact that it's going to change the way we do surveillance. I think we are going to have a bioforce put together, just in the same way as today we have an air force. In the US, we have a space force that we've created. In the UK, there's a cyber force that's created. We are going to have a global bioforce. That's going to keep watching for us to see if there are any outbreaks happening. We're going to have public policy much more and better informed by the information about those outbreaks to make decisions around travel. In terms of our day-to-day life, I think that we do get back, to normal and back to work. Some things have changed. I think there are, and I think it may even happen with the flu. I think mask wearing is going to be more destigmatized, and I think people will wear that more frequently if there is, even if there is sort of a flu outbreak. I think the nature of work is going to change, and how we work is going to change. And I think we've entered an incredible new era of vaccines and therapies. These nucleic-based vaccines, like the mRNA vaccines from Moderna and BioNTech, are truly fantastic. The ones we saw are the first two, but I think there's a long list of potential vaccines behind them, and all enabled by this new era of the genome that we're entering. So I think medicines have been changed very profoundly. I think surveillance has been changed very profoundly. And I think how we live and work is going to be changed.
So let's talk about how you're handling your own workforce. Obviously, I know investors are very excited about your genome sequencing products, and you just had a great quarter. How are you making decisions about when to bring your own employees back to the office?
Yeah, so Emily, we're deemed as an essential service because the tools we provide are used in fighting the pandemic. So we are part of the global surveillance infrastructure here in the US, but also in the UK and Australia. And in fact, we're in 130 countries around the world. And so what that means is about a third of our workforce today and throughout the pandemic has been coming into work to help build the machines and reagents and consumables to support our customers. So some of them are in fighting the pandemic. We have another set of customers that work in cancer treatment. And so our tests are used to match cancer patients with the right cancer therapies. Our tests are also used to help pregnant mothers assess the health of their babies. And then we're also used to diagnose people who have genetic diseases. And so all of those activities needed to carry on through the pandemic. So about a third of our workforce, I said, comes in every day. And what we've had to do is reconfigure our workspaces so that, we can maintain social distancing. People are required to wear masks. We have thermal scanners. And so we've reconfigured our work environment so that people can work safely. And then about 2/3 of our workforce is able to work from home. And so they do so. And to your point, we've been able to keep the business going through the pandemic. So, in Q4 that we just reported last week, we had a record quarter on a number of fronts. We had record revenues, we had record orders coming in. We also had record shipments of our mid-throughput instruments and the second highest quarter ever in terms of orders for our high-throughput instruments. And so our customers, the hospitals, the cancer centers, the academic research institutions are still finding a way, to get to work and provide those essential services to patients around the world.
Meantime, obviously we're seeing stocks like yours on the rise, lots of money flowing into tech, biotech. Are you at all concerned about, entering bubble territory when we look at this from a market's perspective?
Yeah, I think if we look at biotech specifically, I think that we truly are entering sort of a pretty important area in terms of an era of biology or an era of the genome. I think we are still at the very, very early stages of the impact that genomics, for example, is going to have on human health. Although the use of genomic testing can really help match cancer patients, for example, to better therapies, it's still less than 10% penetrated in terms of the overall market. In terms of genetic disease, 5% of people are born with a genetic disease. And for the more severe cases, today what happens is they go on this diagnostic odyssey for 7 to 9 years with many, many invasive tests. A certain number of the families go bankrupt because of the medical costs associated with that. Now, the alternative is a few days after birth, you can do a whole genome sequence in the baby and the parents, and in maybe 50% of the cases, you get a diagnosis right away. And yet, that test, because it's so new, is only deployed in very low single-digit percentage of patients. And so we're at the very, very early stages of, first of all, understanding, and so there's a lot of research to be done about how genomics impacts human health and disease. But then even where we do understand the clinical implications, we're still at the very early stages of clinical adoption. And so I can understand why investors are excited about the potential and why we've seen, some growth in the investment in the category.
So you think a Bioforce is necessary, but how likely is it, given how slow things are to change in Washington?
Yeah, I think we have maybe in the last year seen probably a decade's worth of acceleration happen in the use of genomics in infectious disease. I think we will absolutely have a Bioforce, some version of a Bioforce, because today, we're already starting to see it rolled out. Now, not in a hugely coordinated way, but you're seeing countries realize the importance of doing the surveillance of how the virus is mutating in their environment. Countries like the UK are a leader in this, where today they sequence about 10% of all infected patients. They were one of the earliest to call out that the virus was mutating, and there were more dangerous strains of the virus emerging. But now you've seen a whole set of other countries follow up. So you have a national surveillance network being stood up in Australia, for example. The EU Commission in the last couple of weeks have asked its member countries to stand up surveillance networks and sequence about 10% of all infected patients. We're behind in the US. We do about 0.3, 0.4% of all patients are sequenced, but the new administration has laid out a strategy to significantly increase that and put in a lot of funding in this budget that's going through the process right now to support that funding. And we're also seeing surveillance networks being set up in Latin America. We've donated some sequencers to countries in Africa to make sure that this is a global network. So we will have a global surveillance network set up. Today, it's going to be set up in patches, and there's leadership needed both at the national level for countries to set it as a priority, which is starting to happen. But at a global level, we'll need cooperation to align on things like data standards, where the sharing should happen. We also need to make it safe for countries to share the data such that if they find an outbreak in their country, they don't get penalized and there aren't, economic restrictions or travel restrictions. And so there's work to be done, but it's happening and it's been accelerated a lot in the last year.
All right, cooperation sounds so simple, but often hard to come by. Illumina CEO Francis D'Souza, thank you so much for joining us. We'll have more Bloomberg Technology coming up. This is Bloomberg. Amazon says it has closed facilities in Arkansas, Illinois, Oklahoma, Missouri, Tennessee, Texas, Indiana, and Kentucky because of the harsh weather that continues to grip parts of the southern United States. Ice, snow, and Arctic temperatures have plunged Texas in particular into a crisis that has left nearly 5 million people without power. You've got oil refineries and shale wells still shut down amidst this unprecedented freezing weather, the deep freeze continuing until at least Wednesday. We're going to continue to cover this story as it unfolds, and stay tuned to Bloomberg Television for the very latest. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. This is Bloomberg.